The only people that do not lose money in the forex market while trading are the brokers. They're also the only people that you may never avoid as a forex trader. They might be your worst foe or your best ally. So in this video, I want to look at who are brokers, what features do you need to look for in a broker, and then finally I give you my journey or my experience with brokers. So maybe you have been looking into forex, or you've just been trading and you've been scammed by a broker, or looking for a better broker than the one you have. We'll look at who brokers are, the types of brokers, the 6 features you require in a good broker, and then I share my journey and my experience with brokers. So definitely brokers, they go in between. In the normal day-to-day life, we see banks giving exchanges. So for instance, you want to travel abroad, you take your currency, give to the bank, they give you the currency for the other country you're going, or the exchange bureau that or other private entities that also give these exchanges. So those are also brokers. So in the forex market, the brokers, they execute your orders, or they go in, they give you access to the liquidity. So having said that, we have a number of brokers. So you have the non-dealing desk broker and the dealing desk broker. So we start with the dealing desk broker. The dealing desk broker is what loosely is called the money maker. They do not give you the actual interbank price, but they give you price that mirrors the actual interbank. Their spreads are variable and they're not close to the interbank spreads. So these are brokers that they reduce the risk they make trading less expensive for the trader. But for them to do that, they take the other side of your trade. So if you're buying a currency, say Euro USD, they will be selling that currency. So that's conflict of interest already right there. So, but of course they always make money, because majority of traders lose money, so they'll end up making money. But because of that conflict of interest, it can make them also to be greedy and do their business the wrong way, and might sometimes stop hunt you or do things that would disadvantage the trader. But nowadays, most regulation has come in and such behaviors may not be there as much. The non-dealing desk brokers, these are brokers that give you the actual interbank prices. When you execute an order, they take it straight into the interbank liquidity, so you get the actual price that is actually trading globally at the current time that you take your order. So the order goes straight, so it's straight processing for that order. So these traders do not take the other side of your trade. These brokers, I mean, do not take the other side of your trade. They may charge you a commission. They may make their spread sometimes variable so that they can also make money along the way. But generally, they don't have the conflict of interest of taking the other side of your trade. So because of the pivotal point that brokers play in the forex market, so there are countries that have regulated certain brokers to offer their services in those countries. So regulated brokers are actually brokers that have achieved or have attained certain thresholds that different market authorities or capital market authorities in different countries or jurisdictions have placed for them. So for instance, if a certain broker wants to offer the services in the US market, so the US market authorities will give, the CFTC will give the broker a certain threshold that this broker must achieve for them to offer their services there. If that threshold is achieved, then the broker is licensed to offer their services in that country. Other brokers don't care about that licensing, so they just offer the services globally wherever they are from. So the difference between regulated and unregulated brokers is that the regulated ones, because there's so much expectation from them and licenses, and those things are also not cheap, they also reduce their risk. So you'll find they'll offer you smaller leverages, so maybe 1 to 50, 1 to 30, 1 to 100, a very good regulated broker would give you that. The non-regulated ones will give you crazy leverages, 1 to 10,000, 1 to 1,000. So I don't think that you need such high leverage to make it in forex trading. In fact, such high leverages would predispose you to blowing that account. So also security. I think this is the major point when it comes to regulation. The regulated broker, when they run away with your money, you can always, or they have problems, encounter any problems with them, you can go to court and address the issue and you get paid. But the non-regulated ones, if they close shop and you're not able to withdraw your money, that's it. So I think that's the advantage of having a regulated broker, because now you feel as if your money is safe. What are the 6 features that we need to look for when choosing a broker? So guys, if you are just new to this channel, my name is Dr. Josh, a trained medical provider, practitioner, and also a passionate trader. Hoping one day that I will turn from medical practice to fully trading, just like Dr. Brooks. I'm a good fan of him. If you're not yet subscribing to this channel, kindly subscribe, like, and share our videos so this content might reach many people that are also entering the Forex market. What are the 6 things that you need to look for? Number 1 is the cost of doing business. Forex trading, you should treat it as a business. So the broker will charge you a commission, especially the regulated ECN brokers. The non-dealing desk brokers will charge you a commission. So you need to look at what commission are they charging. Is it $7 per lot? Is it $5 per lot? Is it $14 per lot? So look at that commission, so that every time you enter a position, a commission is charged beforehand, so they deduct that money immediately. Then part of also doing business is the spread. Does the broker offer tight spreads? If you to choose between a broker that offers you a 5 pip spread, another one offers you a 2 pip spread, definitely go with the one that offers you a tighter spread. 2 pip spread is much better. So that's cost of doing business. Choose a broker that will cost you less to do business. Because if you add those costs, by the end of the year, you realize that you've spent a lot of money to the broker side and you made nothing. There's a chance you even lost money in Forex trading for that year. Lose money in, at least in the actual chart, other than losing more to the broker. 2, and especially for scalpers. If you're a scalper, you want a broker that charges you less money to trade. Secondly, you need to look at what is the ease of deposit and withdrawals. If you find it difficult, or the broker puts a lot of hurdles to be passed before you can withdraw your money, I don't think that's a broker you need to trade with. That's a danger sign. So get a broker that you can easily deposit, and at the same time you can easily withdraw. Same day deposit, same day withdrawals. I think that's the best broker. Nowadays, I think they will do it faster. Other brokers, I think the one I'm using currently, I withdraw and in minutes I have my money in the account. So choose a broker that would help you to access your money quicker, but also want to load up money, you can load up money quickly. Platforms. So depending on your trading and depending on what kind of platforms that you are used to trading with. So maybe you are more conveniently trading with MT5, or you love CTrader. So get a broker that offers the platform that you use in your trading, day-to-day trading. Definitely the brokers that will give you CTrader, the brokers that will give you TradingView, MT5 or MT4. From the website, you might find that the broker actually offers MT5, but again, in your jurisdiction, you find that MT5 is not available for your citizens, for citizens from your country. I think the brokers that don't offer MT4, MT5 in the US, but they offer those platforms in other countries. So find out also that these services actually are offered in your country. And that takes us to the location. So the broker might not be regulated in your country. So it's generally is a regulated broker. So for instance, the broker is regulated in Cyprus and you live in the US, you're a citizen of the US, or you're a citizen of Kenya like me, and the regulation is offshore. So you may not want to go with a broker that is regulated far away from you. Maybe take a broker that either is regulated in your country or in your region, because I also know that there are economic blocks that use almost the same laws. So the broker should actually be regulated either in your region or in your country, so that if you have any complaints, you actually can go to authorities and get the matter addressed. So that's also location is of importance. So just don't just look at the site, fail to see whether that actually works in your country. That takes us to customer service. What's the customer care like? Is this a broker that you text them today in their live chat and you wait 2 days, 3 weeks before you get a reply? Avoid such ones. There should be a broker at least with a live chat. The ones that you can call, they have a number that actually goes through and they answer from the other side. So such a broker is one that will actually listen to your complaints and be able to address your complaints. Because sometimes you have serious, technical issues. Maybe you're not able to log into your account, so you need to be able to contact your broker. Or maybe there's a trade that wrongly placed, or the price was poorly off, or maybe your trades were closed without your consent. So you need to be able to address those issues with the broker. So if they don't have live chat or they don't have a phone number that you can call them with, avoid such brokers. Also the markets, finally the markets and the instruments that they offer. The broker should be able to give you the instruments that you trade. I think that's the first thing you look for. So if you are a purely forex trader, you never look into any other instruments to trade, then well and good, go with any broker of your choice that does offer those instruments. If you trade indices, don't go up with a broker that does not offer indices. It looks simple, but sometimes people register for brokerage. They take a broker, they register a lot of money, and then when they want to trade, they find out that they can't access the instrument, their favorite instrument to trade. So check out in the website, the broker's website, do some due diligence, look it up. If they don't offer the instrument that you trade, then forget about that broker. If you're trading commodities, make sure that the commodities trade are there. If you're trading oil, the oil should be there, the gold should be there. So look at that, and for you to make a decision to choose your broker. So those are my top 6 things that I look for when looking for a good broker to trade with. Personally, I've used a number of brokers since 2018. Some of them are not good experiences, some are wonderful. Currently, I use 2. I use mainly Pepperstone Limited. I think they are stationed in Australia, but also in my country, there's a local. They are regulated by the market authorities in my country. The offices are just within town. I have contacts to their people. They offer me to trade on TradingView. They have a trader accounts also, MT4, MT5. So personally, I use MT5 and also trade directly from TradingView. So that in that manner, the broker serves me. If you want to go with such a broker, I've linked them in my description. So if this video was made any sense to you, if it helped you, if you found value in this video, do like and share so that also it can reach many people like you that might also find value in the video. If you're not yet subscribed, kindly take a moment and hit the subscribe button. Cheers.